Welcome to the big show we call Biz Asia America. This is hour number 2. Coming up, we will have much more on those Chinese markets and whether or not they can continue their winning streak. We will also have Mark New, who will show us some of these new gaming devices. You know what I'm talking about. It's called the new Xbox. He'll join us later this hour. But first, we get to our top business headline. The Chinese stock markets. Take a look at this chart for Chinese stocks. They have been in a very tough time for the past year, but lately, they've been on a bit of a tear. You can see there towards Jian. A little 5-day rally, make that almost 6. It's the longest winning streak in the Shanghai Composite for the past 8-day run-up in early February. Basically, it's been a very difficult year, except for the past month. We now have a guest here. We're joined by Jian Chen, who is an Adjunct Professor at Johns Hopkins University, Managing Director also of Financial Advisory Group, IFE. Welcome to Biz Asia America. You and I have talked a lot about this before. It is strange. The global markets have been rallying. The Chinese markets have been quiet. And sometimes it's the opposite. First of all, this rally in China, what's causing it?
I think there might be several different explanations, but the most direct one, I think, is the investor in China. They're thinking the government might have another round of expansionary monetary policy, just like what has occurred in Japan. And if you observe, ever since the new prime minister took power in Japan and pushed up this new expansionary monetary policy, the Japan stock has increased 50%, so very impressive. So the China investor might be expecting similar policy from the central government.
It is, for lack of a better word, frustrating for a lot of investors, because every time we talk about the market in China going up or down, it always has something to do with what the government may or may not do. And I don't know what your advice would be to investors, but how do you get rid of that part and just focus on buying and selling good companies, which is probably what most investors would like to do?
Well, it has been pretty hard in China because, China's economy has been growth like the highest rate in all around the world, but the stock market has performed really poorly in the last decade. Actually, if you invest in the last decade, you barely make even, but you invest in the real estate, you maybe make profit for tenfold.
And so, that goes the other question. Mm-hmm. People in China, there's obviously a lot of money that's there. Mm-hmm. So the question is, where does that money go? Is it gold? Does it go underneath the bed? Do people dig a hole in the yard? Does it go into real estate? And lately, it's been real estate. I mean, that's really been the winner. No matter what anyone says, that has been the #1 winner in China. It hasn't been stocks.
It has been basically real estate. That is pretty much the dominant investment vehicle in China. Although the government have put out many policies to control, to limit people's purchasing rights about the investor properties. But there has been some other financial innovations. I just come back from China, and basically there's a new type of investment vehicle they call the trust investment. And basically in that market, people can invest in real estate not directly, but indirectly.
So it's still back to real estate.
Still.
I want to ask you something. Remember, I'm sure you do, 5 years ago, we were talking about, I was covering the story, how China was opening up 100,000 new trading accounts every single day. And this was back when the Shanghai Composite was more than double where it is today. Fast forward to today, what happened to the retail investor? Why does the retail investor in China, to some aspect, doesn't really believe in the stock market? They don't have confidence in the stock market.
Well, I think from the past experience, basically there's a common saying that only 1 out of 10 can make profit, 2 out of 10 can break even, and 7 out of 10 are losing money in the stock market. So even if you look at the fundamentals, the PE ratios, it looks very good. But
cheap,
people has been hurt. Yeah, it has been cheap. But people has been hurt really bad.
Is there something that the banks, the government, the salespeople, I mean, what is that missing ingredient that would get consumers and sentiment back for the Chinese investor?
I would think basically the transparency in the Chinese stock market is of vital importance. Basically,
the trust.
Yes, the trust. So the government, especially the Stock Exchange Regulatory Commission, need to put up some example. They are going to punish the insider trading and all the irregular tradings. And also they need to basically create a more viable environment for the Chinese companies, not just for the real estate companies, but also other companies.
So just for our audience, foreigners have a very difficult time buying A shares. They usually buy through Hong Kong through the H shares.
Yep.
What advice would you give to the foreign investors who's watching this show and says, hey, I'm interested in buying China. I believe what you're saying. So how do they do this?
Well, there has been a few other foreign REITs, like in the Hong Kong market and in Singapore market, there has been REITs which invest in the commercial real estate, which I believe is probably going to take off in China, because in the last 10 years, it's primarily the residential real estate, but there hasn't been a lot of commercial real estate investment vehicle available. So
you're bullish on commercial real estate, so offices and so on.
Yeah.
Jian Chen, thank you very much, Professor of Finance at Johns Hopkins. Thank you very much, and welcome back to Biz Asia America,
My pleasure.
And for your insights.